Let us see how we can go ahead with chart reading based on support and resistance. This is a daily chart of an asset. Price action works same on all liquid assets which are traded regularly. So here we are looking on daily chart. I have marked some lines and we will discuss many things in this one single chart. First thing we notice over here is a big gap up. This is a gap up on daily chart from previous close of last trading day. This is a previous close, and from this point to this point there was a big gap up. After gap up, prices sustained up and went on to make new high before any retracement. So there was gap up opening and then price continued to move higher and higher till this point and this point. After making this high, there was some significant retracement, but this did not come back to touch this gap up area, and after that price moved again higher and higher till this point. Then there was small retracement and again it continued higher. So up to this point there was continuous upside momentum and price climbed very rapidly from around 900 to around 988. This is almost 10% move in around 1 month. This is one retracement which is not very clearly evident, and this is proper retracement, and then this is second retracement. So this structure was in uptrend with formation of higher high and higher low, higher high and higher low, higher high formation. Once prices crossed and closed above this high, we can mark this gap area as significant area, and this will become an area of support. From here price moved higher and higher and higher. This is higher low, this is next higher low, and this is higher high. Now what happened over here? We can mark resistance areas as price crosses and closes above higher high. So this will be one higher high resistance area, and this will be another higher high resistance area which is crossed and closed above. Once price crosses this high, the low becomes support area. This is support area. This is one support, this is another support. This way we can mark small resistance areas and small support areas. This was clear uptrend, and we can also mark a trend line. So this is lower high and higher high. This way we can mark a trend line. This is uptrend, higher high, higher low, higher high, higher low, higher high. We are connecting two higher lows, and this is a trend line of this trend. This way we can mark a trend line. Now what happened here? Trend was intact as long as support was not broken and trend line was not broken. When trend is valid, supports are respected, resistances are broken. So this is valid uptrend. Now what happened over here? This trend line was broken by this big red candle, and it also broke a support area. So break of trend line, break of support area, these things are indicating of a downtrend. And from this high, what happened? Price came down very rapidly and broke two support areas. So practically this is a downtrend on this time frame. As this candle broke down in big way, there must be big supply which has caused break of support areas. So we can mark main resistance line at this top. So this is main resistance, this is main support. Top of the line is resistance line, but supply area is different and is below resistance line, where we can initiate short selling trades. So this is the resistance line, final resistance, but supply area is from this area to this area, and in this area we can start selling. So here we can see there is first short trade here, then next short trade here, and third short entry here. We could get 3 short entries in this supply area, but that is not the topic of discussion for today. Support and resistance are lines which we can mark at swing high and swing lows. However, some people take highest candle close as resistance line and some people take highest wick as resistance line. Some people also take bottom of highest candle close as resistance line. Here you can see this is highest candle wick. Some people prefer to take this as a resistance line. This is highest candle close. So if you check this candle has given reaction for this resistance line. What do some people do? They take low of highest close candle. This is highest close candle. They take this as a supply area. Here we can see there was a reaction at this point also. So this way different people use different methods, and resistance is actually an area. It is not one single line. Each of these methods work at one point or other point. It is always an area which is more important than one particular price, and we cannot take entry based on single price point. Otherwise we will miss lot of entries. We take entry based on price action in that area. We look at what price is actually doing when it reaches this area of supply at this point, at this point, and at this point. Price action is more important while reaching that area, which helps us in making final decision. Price action for entry is always checked in lower time frame, not in same time frame. So as this is a daily chart, we can check price action on 75-minute chart or 15-minute chart for entry. Some people also use 5-minute charts. It is not possible to predict fall till this red candle is formed. We cannot predict that this red candle will form and it will break support areas. But once this is broken, then we can look for short entries, because this has broken a trend line and support areas. So this candle is indicating selling pressure. After formation of this candle, we can look for short entries. Before formation of this candle, we are long, we are buying, and we can just keep our stop loss trailing. We cannot create a short position at this top based on technical analysis. But there are some other people who sell. They are market makers. They don't need chart, they make charts. We have to follow their footprints. We do not have adequate money to create short positions at this place and make market fall. Even though we are not selling here, there are 2 or 3 possible short entries which I said. One can be this entry, another can be this entry, and third is this entry, where we can look to sell. After this short entry, prices came down rapidly and they kept falling till this support area. I would be hesitant to buy immediately at this support, as my stop loss will be very big at this point, because this is support area, and if we want to buy at this point when this candle is falling, if we try to buy at this point, our stop loss will be here or at least here. We cannot keep our stop loss at this point, because price can easily come down here and then go back after filling the gap completely. So at this point of time, when price is touching support, I will not buy. If I try to buy at this point, my buying point will be lowest, but then my position size will also be very small, because I will have to keep stop loss here or here. We will discuss this in details later. But we can see that this gap is acting as a support here, and price went up nicely from this point up to resistance area. So at this point we have 2 touches at support area. One is this touch and another is this touch, and it is proper trading range which has contained the price within channel. This is one support touch, this is one support touch. From here prices went higher till resistance area. This is one touch at resistance, this is another touch at resistance. This way there are 2 touches here, 2 touches here, and it is a proper working trading channel. This is trading range which is sideways. Price is contained within this channel. In this trading channel, at this point, who is successful trader? Reversal traders were successful at this point, who have shorted at this point before break of resistance line, and they could bring the prices down rapidly. Because price was moving up and then it came down suddenly. So this is reversal trade. Reversal traders were successful. Someone may call this as mean reversion trade. Here there was no breakout, so breakout failure traders did not enter here. Breakout traders enter after resistance is broken, and breakout failure traders enter when there is breakout and it fails and candle closes below resistance level. Now let us see some more fine details. Here we have two supports. This is one support, this is another support, two touches at support area, and we have two resistance level. We have trading range where support and resistance have been separated and there are two touches at both points. So how they are separated? If we see here, from this point price went up, then came down, there is wide area here, and then it went up again. So there is wide white area here. There are no touches in this area and no touches in this area. This way prices went up, came down. It looks symmetrical, up down, up down. So this looks like good symmetrical pattern. There is roughly same distance between these two supports and these two resistances. These touch points can be called as anchor points, and there is similar distance between these two anchor points at bottom as well as at top. Now here what can we see? When prices came down from resistance area and when it touched the support at gap, what happened? Price came down, closed below, but immediately it springed back and it formed a spring. So these two candles are kind of a spring. We will discuss spring at later time, but this is a spring action. This indicates failed breakdown, and breakdown traders who wanted to sell below this support to get target at this point or this point may get trapped. So this is failed breakdown. They have trapped breakout players, and then after that prices came back all the way till opposing area. So from support area prices went up till resistance area. This is first target of this spring. It was achieved. So this was very good trade at this point. One could buy a spring and book profits at this resistance level or at this resistance level. From this second touch, when the price is coming down, what do we notice? From this point, as we are coming down, we can determine who is in control. After this touch, when prices came down, it formed a trading range here. So this is a trading range which I have marked at this place. From here to here, it was a trading range. It is small trading range. What is this trading range indicating? It indicates that there are willing buyers who don't want price to touch support line at bottom. So buyers are willing to buy above this support line. They are not allowing price to touch this support line. They are buying here, they are buying here, they are buying here, and making prices go higher. Their buying is having an effect. These buyers may have some information which indicates higher prices soon, and these buyers are buying any quantity they are able to get in this buying area. This looks like an additional strength. We can say so because there is another higher low formation and spring action of this higher low, and after that prices went on higher and higher. We can see that demand is good at this point. Here we can see a big green candle. There was a gap down and then there was formation of big green candle, and then again this was held at higher low. So buyers are coming even before this smaller support area. So there is good demand and prices are increasing. This also indicates that sellers are very weak and they are not able to break higher supports. I hope you all agree with these findings. In this trading range, we have double top and double bottom, and we expect prices to hold again when they reach support area. So when these two supports are formed and prices are coming down from this area, we expect that this double bottom will be able to hold prices, and we can expect this before formation of these candles. How? Why do we think so? If you notice here, there are no other touches in this area except this first touch and this second touch. There are only two anchor points. There is clear white space and prices had gone up nicely from this area both times. So first time it went up, second time again it went up, and in between there is no touch. This area is clear. Similarly at top also there is no touch. This is one touch, this is second touch. In between there are not many touches. So this is clear white space. These look symmetrical anchor point with a high between these two support points. So this is very symmetrical diagram. If we check this, this is very symmetrical. So if price comes here like this and then it goes up, this will not be symmetrical action. This is more symmetrical. Now what happened here? At this point, buyers are holding prices higher than even this support area. We can see that price is not coming down and it is not touching support area. So buyers are coming earlier. They are holding prices higher. So this is previous low. So usually what happens, when prices fall below previous low, then there is good liquidity, and at these points it is possible to buy larger quantities without increasing prices too much. So many buyers wait for break of previous low so that they can buy in panic. Here buyers are coming even before break of previous low, and buyers are holding the price even higher than support area. This means buyers are really aggressive. Sellers tried 3 times to break below low. So this is one time, second time and third time. 2 times it broke local support, but it could not break previous larger support area. And buyers always took control on all 3 occasions. And then 2 times it formed higher low at this point. This is higher low, and this is springing action at this low. This is spring on this low. This means buyers are really aggressive. They are not allowing prices to touch previous low. Here we can discuss few more points on anchor point and make sure that this concept is clearly understood. Suppose these two are weight bearing pillars, this one and this one. These two are weight bearing pillars of some strong building, and building is price action. This price action which happened between these two anchor points. If two anchor points are away from each other with good price action between these 2 points, it looks like good building with good foundation. But if two anchor points are close to each other with very small area of price action between these 2 points, like I mentioned, like so this area, if these are 2 anchor points and this is very small price action in between, then this is very small building and it will not be able to hold larger weight of price. What will happen if price comes back to this point after long time? Suppose here there are 2 points, 2 touches, and then price comes down at this point. These 2 supports may not be able to hold this area. This will not be a symmetrical action, but this is symmetrical. That's why this point is holding. In fact, if there are 2 points like this which are very close, then interpretation becomes very difficult and oftentimes it is not taken into consideration. Usually price falls below these kind of anchor points and then they may reverse. What I am saying here is, if 2 anchor points are away from each other, then there are higher chances of holding higher high than other scenario when these anchor points are closer to each other. Same is case with resistance. If 2 resistance points are close to each other and then there is upthrust, it becomes really difficult to take short entry, especially because target is not so good many times. So like here, suppose these are 2 anchor points and then here there are two anchor points like this, and then price goes up and forms an upthrust. Then it is really difficult to take short entry because first target is very close, it is here. So it is not very good risk reward trade, and many times this kind of trades are missed, and it is better to miss them. So why is it better to have some space between these 2 points? Usually if these points are very close to each other and not much white space is in between these 2 anchor points, then there is less time spent. People tend to ignore it or sometimes do not even notice it. But when there is adequate space between these 2 levels, then they are given more importance and usually they hold. Having white space between 2 anchors is usually good for this reason. Now let's analyze this smaller trading range. What are findings in this trading range? Here at first low we can see price could not touch valid support area and higher level was held, and it went above previous candle's high. Here it came down consistently, and this is a point where price first crossed and closed above high of previous candle. So some bulls took action here. What happened after this? When price came down again next time, it crossed below this low, but next day there was gap up opening. So bulls came overnight and they took the prices higher. Then at third time what happened? There was a gap down, but then bullish Marubozu candle formed and 3 continuous day came with buying, and this area of resistance and these 2 areas of resistance were broken. So prices went on increasing at this point. If you have read Jesse Livermore book, which I had recommended, this is first advertisement by manipulator that higher prices are indicated. Second candle is buying by traders on floor, and third candle is buying by breakout traders. So this way we can correlate with that book. This is first buying by manipulator, second by followers, and third by breakout traders. When breakout buyers enter, Jesse Livermore exits his half position in profit. So here there is good liquidity in which Jesse Livermore used to sell. You can see there is increase in volume at breakout candle, but candle is not going very high. This is also called as effort versus result, which we will discuss more in main course. So here Jesse Livermore has exited his half position in profits, and then he used to wait for further fall to buy back his position. Here he would buy, here he would buy and support prices so that there will be another up move. What happened after Jesse Livermore exited? There was weak selling. Sellers were not so aggressive and they could not make the prices fall very rapidly. Here we can see that there is increase in volume, but price is not falling very rapidly. When this third attempt fails to break even after gap down, we are not able to touch this support line and we are not able to break this trading range on big time frame. Then what do we need to do? We have to assess this total price action. And how can we assess this price action? We assess it with comparative and relative analysis and bar by bar analysis. We need to see who has upper hand and who is losing control. We compare swings, this swing with this swing, this swing with this swing. So we compare swings on upside with swings on upside, or swings on downside with swings on downside. Then we also compare swings on upside with swings on downside. So this way we compare with relative and comparative analysis. We can notice that first bout of selling was very strong at this point. This selling broke support, broke trend line, and 2 supports were broken. 1 support and 2 support. These 2 supports were taken out with first selling. Then prices went up slowly and there came second bout of selling. Here also we can notice that there was gap down in selling and price came down and touched this support area. So after establishing downtrend, price went up and again aggressively selling was seen. If we compare these two sellings, this is more aggressive because price came down very rapidly in just 2 days. This is less aggressive because price came down with one pause also and there is lot of overlap. So this is less aggressive selling. Same way we have to analyze buying swing. Initial buying swing was slow and with retracement in between. So here there was increase in price, then retracement, prices went up slowly with smaller candles, then there was retracement, then price went up again and retracement came, then again price went up. So there is up down movement here, but in this swing high what is happening, prices are continuously rising, there is no retracement in between and time taken is also less. This is more aggressive buying than this buying. Here we can see that closes are also strong and there are some gaps as well. In this trading range we can notice some more things. It shows good characteristics of accumulation. There is selling climax on lower time frame, then it is followed by phase B and phase C and then spring. Here is spring. This can be called as spring of phase C, after which price went up and it is minor sign of strength. Then it came down again and formed last point of supply. So at last point of supply there was retest and local spring action. Last point of support was formed, not supply. So this is last point of support. This was formed before breakout. After breakout of this local trading range, what happened? So this is breakout and there is sideways action which is kind of backup action, and then again there was higher moves. So this is higher high formation, higher high, higher low, higher high formation. After this breakout which sustained above this resistance area, what happened? There was backup action. Then this breakout sustained till higher trading range top. So this was higher trading range top and breakout sustained above this. Resistance was clearly removed and then after some retracement prices gapped up. So this was some retracement and then price gapped up above this resistance area totally, and there was increase in volume, price went up rapidly. Before this gap up, this is very good entry, this is very good long entry. It is very special type of entry with very small risk. Someone may call it rally base rally type of demand area at this point, but no, this is something else. You may see there are many rally base rally areas on chart and they work sometimes they don't work. I will cover this special method only in special sessions. This we will discuss in detail during full course, as it is time consuming slow process to digest these things. Now let us see what happened at resistance area of previous larger trading range. Here we had smaller trading range at bottom of trading range at this point, which was formed above support level, and that was accumulation. We will study characteristics of accumulation and distribution later on, but from this accumulation price climbed up nicely till previous resistance. There was good cause built in this trading range and it has to show some effect. So this is the effect which we are able to see. Price has crossed previous resistance level and it is able to sustain above that high. What happens at resistance area? There are 4 types of people sitting and looking to trade. One is looking to book profit below resistance area. Another is looking to sell after failed breakout. These are sellers who are waiting at resistance area. Then there are 2 types of buyers as well. One is type of buyer who is looking to buy breakout. Once price crosses and breaks out, these breakout buyers become active. And another is a buyer who is looking to buy at retest after successful breakout. So retest buyer usually waits for successful retest and then they buy. What do we see here? Was this a successful breakout? Well, yes, this was indeed successful breakout. And why do I say so? because price closed above previous resistance area 6 to 7 times here, and it was able to sustain selling pressure. In fact, buyers were absorbing selling pressure. Sellers are active at resistance area, and before going up, all selling must be exhausted at resistance. Sometimes it happens above breakout and sometimes it happens before breakout. Here it is happening after breakout. This is additional strength. What did we see first time when price reached high and created resistance level? It broke down support for first time and fell rapidly, creating downtrend in daily time frame at this place. Next time when it reached same area, sellers were still dominant and they sold aggressively. There was a gap down. After selling, there was a gap down. Here is also a gap down. At this place also there was a gap down. So sellers were aggressive at both these places. But now at this place, what is happening? Buyers were able to cross the resistance area. They were able to hold price above resistance area, and this time bears are not having immediate effect. They did not have enough ammunition. They did not have intentions to sell aggressively. So price stalled for many days above resistance area. After this change in behavior, there was a shakeout of big bulls in this candle. This big red candle came and it caused weak bulls to exit. This kind of bar usually scares breakout buyers. This bar came down to local level of support and formed a spring here. If we check, this is a local area of support below this red candle, and this candle springed here. There might have been a good pattern to buy on lower time frame, and one can take confirmation entry or even a risk entry. It depends upon individual. But this is a place to buy on dips. When there is background condition of strength, then we buy on dips. Everyone tells us to buy on dips, but this advice doesn't include very important aspect. Stocks which are strong should be bought on dips. Not any falling stock can be bought on dip. After this red bar, which is last red bar before breakout, this might scare buyers again because this bar is reacting from resistance and has higher volume. If you see, this bar has higher volume than all these bars here, but in reality it is not having any selling effect. It has closed just near close of previous bar, and then there was a big gap up and good up move with huge volumes. What is this indicating? Huge volume means huge quantity of buyers and sellers and very high liquidity. So people who were short, they will have stop loss above this high and this high. All these people are exiting their shorts when there was big gap up, and many people must have bought because of strength. They must have bought on breakout. Now this bar is closing midway, means there is some supply at top. We will study these types of bars in volume analysis section. Huge volume means huge demand but huge supply. So buyers will need to check for more supply before going up, and they wait for some more period before aggressive buying. If there is big supply, then buyers need to buy big quantities, and there are high chances of failure once they exhaust their buying capacity. So instead, they try to check for more supply by bringing prices down or by waiting, as they already have big positions. As high of breakout bar has been crossed at this place, what happens? So we can mark a resistance line at this high, and as high of this resistance line is crossed, what happens? Again there will be 4 type of people waiting at that level. Once price crosses this high, what happened? Price crossed above previous high with lower volumes and it closed above previous high. But this candle, is it very strong breakout? No, this is not a significant breakout. We will study significant breakout in significant bar analysis and volume analysis. But next day after this breakout, what happened? There was a red bar and it closed below this resistance line. And then what happened? There was a follow through selling. There was big gap down. There was gap down and price continued to fall below. till this point. And what is this point? This is a point of previous resistance which is now a support. This is a phenomenon where previous resistance turns into support. So this is major level of support now. It was major level of resistance earlier, now it is major level of support. What happens at this major level of support? There is a gap which is getting filled. Price shows behavior of spring. These three candles confirm behavior of spring. Buyers are not allowing sellers to go further down and selling is absorbed again. This is again a level to buy on dips as background is still bullish and there is no evidence of sellers. Sellers are not in control yet. From here, price moved up again and swiftly broke the resistance. So from this point, price went up, took a pause and broke. There was a minor swing low which was broken. This is a minor swing low which was broken, but it is not a major swing low. It is minor swing low. So minor swing low is not significant, and for this reason we must know what is major swing high, swing low, and what is minor swing high, minor swing low. How to identify them or mark them? Many people wait for breakout. Many people wait for break of low one more time for confirmation of trend. So once this is broken, many people wait for breakdown below this level. Only then trend is confirmed as downtrend. But if the low broken is major swing low, then there is no need of confirmation. We will see rules for trend identification in separate section, which will be helpful. Here we are making higher high and higher low, higher high and higher low. Price is respecting support and breaking resistance. Till now, till this point, dips were large. Here there was a dip, then this is a dip. So it was large dip and they were giving good opportunities to buy on big dips. Now what has happened after this breakout? When this breakout has happened, what has changed? Some people have booked profits at this level. Maybe those who follow swings, they might have booked profit for swing trading, and some people sell above previous high. So these kind of people might have booked profits. Yes, many people book profit above high because there is good liquidity provided by breakout buyers. Then you can see these red bars. These are 7 to 8 red bars. How are these bars? Do they look like selling bars? This bar took prices again to new support, which was resistance earlier. So this was resistance. After breakout, this turned into a support and price came down back to this support area before breaking out again. Once price reached this area, there was boom, big breakout and price moved very rapidly. So this was last buy on dip opportunity. After this, there is no opportunity to buy on dip. Those people who keep waiting for retracement, they would not get any entry at this point. There were many entries possible to buy on dip. First possible entry was here, then at this point, then at this point, and last entry possible on dip was this point. After this point, there is no buy on dip possible. Now let us see these bars again. These are 8 selling bars which have come down and only 2 bars have crossed price action of these 8 days. So selling pressure is low, buying is aggressive. So this was support and resistance study for bullish scenario. We can see prices kept rising higher and higher. They gave good opportunities to buy. They give good opportunities to exit short positions. But it is important to understand background conditions. Prices may rise rapidly after breakout, like at this point, and they may fall sharply after breakdown. There is always a hope that price may return back and show some profits, but it is never a certainty. I always prefer to keep a stop loss where my loss is acceptable to me, and I make a position size accordingly. I may be wrong sometimes, but when I am right about my stop loss, and if I do not exit at that stop loss, what will happen? I will have very big losses. It is always better to exit when loss is small and wait to book profit as long as market conditions do not suggest change in trend. This is just start of support and resistance. There are many points which we can get from study of different charts, but for today I will conclude this chart and we may go ahead with either some questions or we will go ahead with session on trend lines.